They're live.
All right. So this is an addition to, we're continuing our discussion from last evening and trying, I think we're all saying the same thing in slightly different terms. The fallback, I guess the fallback in the House is that everything is linked unless they take further action. We would like the fallback to be the PPP loans are not linked unless we take further action. Okay, and I think from my last discussion that that would be okay with a majority of the committee in the House. So if we can get that language to Jane, I think we're good to go. And Abby, can you do that?
Yes. So
Thank you.
for the record, Abby Shepherd, Office of Legislative Counsel, from the committee meeting this morning and House Ways and Means, they were also favorable to that action.
So there's what it falls on us, and I've told both Jane and Representative Ansel that my intention would be that any action we take will go on the miscellaneous tax bill, which will give us a while to set up testimony with the affected parties and to reach a final decision. Okay, I think we're just trying to find a way to tread water.
Yep.
But to let the commissioner know, because he's starting to talk to TurboTax, that they can program everything but this one right now and start setting up the forms with the exception of this one line. So I think that's the best we can do. Okay. Okay, I'm not seeing anyone saying no. So if Abby and Graham, if you can convey that to Jane, and I think Abby, you have language that does that, then next week we are doing broadband all week except Friday, because where the House has all day to spend on doing PPP taxes, we jump around, and sometimes for something as technical as broadband, you get from broadband to taxes and it just gets difficult to reprogram. So we're going to spend next week focused on broadband. Then we will finish, get the bills we can get out quickly. We will take the testimony on this one. And I think we're going to need to get the testimony on any changes we decide to make to the insurance markets out today, or at least make our intentions known so that everybody can start recalculating rates so that things can get out in time for next September. So I think that's where we are. Senator Bray.
Thank you, Madam Chair. I know that it's been on our burner, and I don't know if it's even on the stove anymore, but because of our oversight of utilities, I just wanted to check back in on the whole arrearages situation, because they continue to grow. And I guess, I don't know how we would deal with that. Like, do we work by just asking our colleagues across the hall to look for money to support them, or?
Well, I think usually they've been using COVID money. And I think we walked through the budget and health and welfare, but that wasn't part of the discussion. We were looking at childcare and other things, but we'll check in with across the hall.
Yeah, and I thought we put something in 315 about arrearages, didn't we? And it, since it hasn't passed yet, it hasn't.
Well, I wasn't sure where things stood, and I had just heard today from VEC an update on their growing outstanding
Arrearages?
balance.
Okay,
So I just wanted to check in because I didn't want us to lose sight of it.
no, that again is something we could stick on. Let me text Jane. And
Yeah, and Senator Bray, we heard from a constituent with asking this question too a couple days ago. But I was under the impression we had put something in 315 because we took testimony on it and did work on it. And do you recall that, Senator Sorokin? I think
We put money in certainly to continue the subsidy for the Lifeline program. I don't know if I'm answering your question directly.
Right, so. Yeah, so anyway, so I just wanted to true it all up. I have the feeling we did supports, but I don't know that they were addressing the refunding the, now I'm
We're
forgetting the acronym. There's like a,
Talking about arrearages for broadband or for utility?
no, arrearages for electric utilities primarily, but
Yeah.
it probably include Vermont Gas or as well, I think.
and the
water.
town water bills are starting to go out.
yeah, I thought we did something, but I could be remembering. wrong. Feels like we've been here forever.
I know.
Well, we have a lot of.
And normally I could just walk across the hall and say, Jane, and I can't do that now.
And Madam Chair, sorry, Chris, or
Well, it's
Senator
like we have 20 burners on this stove, so it's like.
I think
we-
so.
We
I-
push
I-
things. around.
I agree, Chris, with both you and Senator Hardy. We did do something. I'm not sure it was in this bill.
Well,
though.
we did something at the end, either at the beginning of this year or the end of last year. And I think we put,
I think it was a budget adjustment. We did it.
Right.
Oh, maybe it was
money-
that. Yeah.
Yeah,
Graham, do you remember? Oh, we lost him. Abby, I love your cat.
I do not.
Okay, fair.
okay, just don't let her get a look at Senator Pearson's cat, or we might have some hissing going on.
Well, and yeah. Because the number between all the utilities, just from the electric folks, and they're not the only ones, it's really become pretty considerable. Since the fund that was being drawn on to support these payments ran out of cash around mid-December.
Yeah, and I thought we had replenished that either in budget adjustment. I remember we took testimony. I will.
I can find it. If you guys give me a few minutes, I'll dig for it. I love this kind of thing, but it'll take me a few
All right.
minutes.
Right? Takes a village to remember what happened.
Well, you don't have 5 people sitting in the committee room to tell you. Okay, I'm going to try and get us back on schedule because we actually have a pretty hefty agenda today. And see if we can get all of these. No, this is next week's. This is today's agenda. Okay. And Abby and Graham, oh, we sent Abby off to do something else. This is the miscellaneous tax bill. And then we've got the premium tax credits. So there's Abby's back. Abby, can you just walk us through what is in the miscellaneous tax bill?
Sure. Would you like me to share anything on the screen or would you like to
Yeah,
follow
that
with the
would
documents?
probably be
online?
good. Yeah.
Okay, I will share the section by section. There is language posted. I have sent the updated version. I believe it's just the as introduced version that's on your website, but Faith, I just sent that to you so that you can have what was passed by the House. There was one amendment. So this is, I will start sharing my screen and pull up the section by section. This is more of a, I know we went over the revenue bill one of the last times that I was in, and this is more of a housekeeping bill. Many of these are proposals from the administration and the tax department. There are a few tweaks as well that came in that are even maybe more miscellaneous, not purely about tax per se. So the first change does have a bit of a revenue impact, and I obviously will defer to Graham for more information about that. There are two changes made to the same section of the meals and rooms tax chapter. The first is relating to the meals tax imposed on meal delivery platforms. So if you think of different apps that provide meal delivery services, such as DoorDash is one that has been mentioned. Those are the types of facilitators and delivery platforms that are at issue with this change. So it changes a definition to include these taxable meal facilitators. It creates a new definition. They will be treated as operators like other restaurants, folks who have to collect meals tax. It also makes it clear that the delivery charges will be considered taxable. So that's the first change that is made. The reason that this is amending the same section, but it's split out into two sections in the bill just because they take effect at different times. So that will take effect a little bit later in the year. It will take effect August 1st in order to give these platforms time. That was the reasoning behind that sort of delayed effective date. It will take place in August so that they will have time to change their collection software so they can collect the tax. The second definition gets at some confusion around the tax treatment of sales of alcoholic beverages and whether those are subject to the alcoholic beverage tax when being sold, in particular in situations by nonprofits. So there's a whole list of circumstances under which meals, so food or beverage, but not alcoholic beverages, are exempt from meals tax. And this language goes through those circumstances and makes alcoholic beverages also exempt from the alcoholic beverages tax. The next change in section 3 of the bill relates to the education property tax credit. So it's actually the property tax credit claim form. This was proposed by the taxpayer advocate as well as the department. It is more of an administrative, I'm not sure that it has much of a revenue impact, more of an administrative change. Currently, statute is quite restrictive as to the fields on the credit claim form that a taxpayer can amend. Currently, the only field that can be corrected is for the house site value. Sorry, let me just pull up that language. I always get which one is allowed and which are new. I'm sorry, currently the only line that can be corrected is household income. This adds in the other lines that a taxpayer could amend. So it's house site value, house site education tax, house site municipal tax, and ownership percentage. The taxpayer advocate, this is an area where there are a lot of extraordinary relief requests. That's the only other way to amend these fields. So if you would like more information on the volume of current requests, I would suggest that you hear from the taxpayer advocate.
Okay, Senator Sorokin, you have a question?
Yes, I'm sorry, I can't actually see any of you.
I can see me and two other people, so anyone else has to holler.
Maybe this question's not for you, Abby, but that strikes me as unbelievable. You're saying someone could make a mistake in a field on a tax return and they're not allowed to amend their return without having to go through extraordinary relief?
That's correct, under current statute.
Why would that?
So this opens that up and makes it much broader, so that individuals don't have to go through that process. I think one of the most common mistakes is ownership percentage. The individuals, because they have a mortgage, they think this is a question about how much equity they have in the house, whereas they might be 100% owners and they accidentally or mistakenly put down that they're, whatever their equity is.
I guess my question is, why would we ever prohibit somebody from getting the right information into the tax department?
Don't know.
I mean, why should there be any fields anywhere? I mean, there may be a point in time where you can't amend, but if someone learns within a year or 3 years that they put the wrong number in, why would we? So we're expanding it here, but I guess my question would be, why would we have any prohibition against amendments?
I think that's something we'll ask the tax department and particularly the the advocate.
Okay. Thank you.
Okay,
Yes, I wouldn't be able to speak to why.
why we did
Why limit?
something 20 years ago? Your guess is as good as mine.
Where's Senator McDonald? He would,
I was thinking that he is the only one who would know why we did this, but this is the home site.
May have to do, maybe it has to do with the ed fund that, if you
Yeah,
start
it
making
does.
changes, it affects everybody else. I don't know.
Yeah. Okay, let's keep moving.
The next four sections 4 through 8 of the bill, amend the payment methods that are allowed for several different tax types. It gives the commissioner more discretion to accept payments deemed necessary for payments of any of the taxes or other charges collected by the department. It conforms to the current department policy to accept payment primarily by check or ACH, so bank transfer. And this applies to, there's a general in Title 32, Section 3110 authority to collect by different payment methods. And then it also trues up throughout the statutes on income tax, estate tax, meals and rooms tax, and sales tax to refer back to this general authorizing statute.
Go through this. Most of these have come from the tax department, so
That's correct. That did come,
talk
that
to
was
them.
requested by the tax department. They'll be able to provide a little more information there. The next two sections are actually something that Legislative Council recommended as a fix to an inadvertent repeal that occurred in the very end of the revision process before an act, after an act has passed and then is signed into law. There was a drafting error that repealed a section of statute that didn't exist, and it was changed to an incorrect statutory site. So this changes that. It took effect last July. So these sections are actually in effect retroactively to last July to fix this error. And I could provide more information, but from all of the legislative history, the discussions in the legislature, it was very clear that this was what was intended to be passed, and it was purely a drafting error. But because the statute has already been repealed as of last July, the language does have to be added back into statute.
Okay.
That's quite technical, but does need to show up in statutory language. The next change was also, I'm sorry, was there a question?
Yes, it's Sarah Pearson. What was it?
Sure. So the change, it was 2 years ago, was made to the subordination, the lien subordination fee, which used to be imposed because landowners, when they'd enroll in current use, would get a lien put on their land. That was changed to a contingent lien for financing purposes. This was, I believe, requested by different financial institutions. So the lien fee was intended to be repealed a year later. That is the section that was incorrectly left in statute, and a subsection that was unrelated that actually created the contingent lien was repealed by mistake.
Got it. Thanks.
Okay. Chris Delia will be in, I'm sure, to talk to us about this one. Okay.
As far as I'm aware, that's what all stakeholders believe to have taken place. It's just the drafting.
Yeah, I remember banks do not like second mortgages. And I remember we did make that a contingent lien. And so that makes, I remember doing this. Okay.
The statutory purpose added in section 11 of the bill is to explain the purpose of the recyclable carryout bag sales tax exemption that was created last year. It was created at the very end of the session, and no statutory purpose was included with it. So this adds that in. The statutory purpose is to, I'm just trying to pull up my language. I'll read that to you. It's quite short. This does not make any change to the exemption. It's just making sure that there's a statutory purpose that the exemption is enforceable. The purpose is to lessen the cost of recyclable paper carryout bags incidental to other retail purchases made by customers in Vermont.
This is where when you had to pay 10 cents a bag, you didn't have to pay
Sales tax when it's a
sales
consumer.
tax on it. Yep. Okay.
Yes.
We did do that. All right.
The other user-friendly note to that was that that 10 cents that's collected is the merchant's 100% of that money.
Right.
So it was not.
It was
a
to
lot of
cover
those-
their cost.
Right. That's all.
Okay.
The next few sections are where this bill gets quite miscellaneous. And a few other.
And is it miscellaneous already?
It is already. So
Okay.
the town clerk recording fees are a follow-up to, in 2019, the town clerk fees were universally increased. They were added in as part of the municipal fee report request. There were two fees in here, well, three actually, two that were not increased and one that is actually being decreased to make them all $15 universally. I believe this was requested by the Municipal Clerks and Treasurers Association to bring parity to the fee amounts.
Do you have any idea how much that's going to raise?
I do not. I don't know if Graham has looked into that. That might actually be Dan Dickerson at JFO.
The town clerk fees?
Will we hear more testimony on this one, Madam Chair?
We're going to hear more testimony and everything because in some of these fees, there's a requirement that it go into a digital transcribing
That's correct.
fund to get all of these records online, so you don't have to go down and sit in the clerk's office, or you could go in my clerk's office, you can go and sit and look. Most things, at least all newer land records are on the computer and you can get it. But 50 per page, it's a good thing I'm not still a realtor.
Really? That's exactly what I was thinking. No, I mean that in the positive way. I mean, the cost of closings just keep going up.
They most certainly do. There's a lot of pages in some of these deeds. Okay, we'll hear from the town clerks. Senator Bray.
Yeah, just a quick question. Do those fees at the municipal level that we're talking about here, do they operate under the same construct that we think of agency fees, where basically it's just supposed to cover costs? Or they have they have more latitude?
Don't know.
Would
That
need
would-
to check that. I know that those fees were all enacted in the statute fairly recently, and they were put on the same, 3-year cycle. But I do not know off the top of my head if they're subject to the same fee definitions and requirements. I can check that.
And copying is all over the place. Some places you copy your own records, some places they don't let you touch them. Town clerks run their own worlds and you tread very lightly. Many of them have large dogs in their office.
Abby, you mentioned this was just a few years ago. I think I was on GovOps So that puts it maybe 3 or 4 years ago. But when we shifted to the mandate around electronic records of town clerks, so is this, it's all going from $10 to $15 every page? Because some of them we would say the first page is 15 and then the next pages are $5 or whatever. Could you just, maybe not right now, but the recent history would be helpful.
Certainly. And I may defer to Tucker Anderson, who has worked on this, I think, since those were all enacted into statute. And just, I know you're not looking at the language, but it's just 2 fees that are being changed from $10 to $15. The rest, my understanding is they were already increased to $15 in 2019.
Okay.
So these were
I
two
guess
that
it's per page of what?
This is related to fees and costs allowed after the warrant and levy for delinquent taxes. After they have been recorded, the recording of the levy and extending of warrant is $15. So that's the recording. And then making a return and recording the return in the clerk's office is $15 per page. And then there's also a collector's deed that's being decreased from $30 to $15. And again, I would have to defer to Tucker and to the clerks to explain
Okay.
how that works
But
and what that really means.
It's not necessarily every time you go in and get a copy of a property tax bill or, all right, we'll have the clerks and we'll have Tucker in. This is just our first walkthrough, finding out what's there. Okay, we're on to 13.
Yes, so 13 and 14 are under this healthcare sunset extensions sort of grouping, but they do deal with 2 different tax types and issues. They have been historically over the last few years both extended at the same time. So there's the home health agency assessment that has a built-in sunset. It has been extended several times, each time for 2 years. This extends the current sunset from July 1st, 2021 to July 1st, 2023. This was requested by the administration and included in their budget. The second extension of the sunset is related to the healthcare claims tax. That sunset is on an allocation of the revenues of that tax, which currently go a very small portion, 0.1999 of 1% of the tax revenues goes into this health IT fund. So that also extends that sunset by 2 years. The next change, if there aren't any questions.
I have a,
Listen, I
Madam,
can't-
Madam Chair, I have-
Sarakin, you have a question?
I do a general question. This is the bill has passed the House, correct?
That's correct.
Just how does a miscellaneous tax bill get started? Is it from the administration? They compile all these ideas or sit
Yeah,
around?
Typically,
Okay.
typically, that's why
It
most.
starts out as housekeeping or things they found they would like to change.
Okay.
But the word miscellaneous is very broad, so it is frequently where we park things that we would like to do that we don't have an H bill to park them on at late in the session or an S bill. So,
Since coming to the legislature, I've learned to love 2 words I didn't use all that much before, especially the first one, notwithstanding and miscellaneous. It's like, okay, you can do anything with those 2 magic words.
so that's, yeah, usually they're very hesitant if we're talking about doing something bad to send us one of these, at least bad in their ideas. Okay, pharmaceutical manufacturers. Okay.
So this was a different request to be included in this bill. It came from the Attorney General's office. And this is aligning payment dates with reporting dates for pharmaceutical manufacturers when they're reporting on allowable expenditures or gifts. Currently, the payment is due in January, whereas the reporting, which determines whether they actually owe anything is April 1st. So it lines everything up, both reporting and fee payment due April 1st. My understanding and I believe Chris Curtis from the Attorney General's office could give you more information, is that there would be a lot of payments made in January, and then come April, when the manufacturers determined that they didn't owe anything, they'd be requesting refunds. So it was more of an administrative headache for the office.
And
So
it
they
was all
request-
paper checks.
I think also in the pandemic environment, it was requiring staff to go into the office to issue these refunds.
So Chris talked to me and I suggested he talk to the House and put it on miscellaneous tax. It just keeps people from filing and then having to get a refund. And from whatever reason, these refunds had to be paper checks. And people had to go in and write them in the pandemic, and it just is easier to set the bill and take the payment after they've actually filed the report and you know what they owe. So we'll have them in to talk about it. Workers' oh, this is the annual set the rate.
Yes, that's correct. I'm sorry. So this keeps the current rate the same. The fiscal year 21 rate is 1.4% for workers' comp insurance premiums and 1% for self-insured workers' comp losses. It continues that rate into fiscal year 22. And that was the request by the Department of Labor.
Do we have, Graham, maybe the impact on the amount of money that is lost as a result of that? I know workers' comp rates have gone down, so there's going to be less money for the administration if we keep the rates the same.
I will look into that, Senator. I'll work with Joyce to see if this has an impact. In the current fiscal note, we did not note this as an impact, but you make a good point.
Probably something we'll have the workers' comp folk from the Department of Labor come over and talk to us about, because we don't want to get into a hole there either.
Correct.
Okay. All right. And then we've got the effective dates.
Correct. As I pointed out, walking through the bill, there were a few sort of different effective dates. The default date for all of the sections is July 1st, 2021, but there are a few sections that have different effective dates. For the meal delivery apps, that takes effect on August 1st, so a month later. The alcoholic beverages effective date is retroactively. It's an exemption, so it starts on April 1st of this year. And then the current use contingent lien and subordination fee repeal of the fee and then adding the language back in the statute takes effect retroactively on July 1st, 2020.
Abby,
The only thing that really concerns me is exempting alcoholic beverages at charity functions from tax. But I know the food had issues, so that one I just want to figure out. We had issues with exempting, was it local firefighters from rooms and meals tax? And and there was, you could go to a very swanky hotel and have a meal served, and it would be exempt from the tax. So I'd like to take a deeper dive on that one. And I think on that one, I think we struck that. And I know there was a member of the House who really wanted it. It was fairly contentious, maybe 2 years ago, when we were still meeting in person.
I remember reporting something about that, Madam Chair.
yeah, Madam Chair, I was actually going to say that one concerned me too, so I'm glad we'll take a deeper look at that.
I forget what we reached on this. If you go to the fire station or the local church and they serve you chicken pot pie, I believe that's exempt, but if you go to a restaurant or have a caterer, then it is subject to tax. And they wanted, so I guess this would say that if you go to chicken pie supper at the fire station or the Humane Society or whomever, and they cook it. But I'd have to find out what we did. Because we did not like the idea that you could throw a gala at a really big hotel and everything would be exempt.
Right, your example about the firefighters in their garage is tax exempt, but the firefighters at the Capitol Plaza hosting an event, should that be tax
I
exempt?
think this was Smuggler's Notch. So, yeah, I mean, I think there was a concern about that could be open to some abuse or loss of revenue. So Senator Bray.
Was this exemption limited to 501c3s or organizations like, I mean, is there a relatively tight wall on who's eligible?
No, Abby.
So this language adds alcoholic beverages into all of the exemptions that are allowed for taxable meals. So it's not specific to any, obviously it has to be in circumstances where alcoholic beverages could be served. One of the exemptions is for summer camps for kids. So probably there are no alcoholic beverages being
They're serving alcohol at summer camps. I bet it's popular.
Camp Animal House. Okay.
but
Okay, I think we're
primary
going to
thing-
look at all of those. Senator McDonald.
This proposal simply seeks to allow alcohol to be treated the same as rooms and meals, where rooms and meals are as currently treated.
That's correct, where food or beverage is being, non-alcoholic beverages are being exempt. That's correct.
And maybe, Madam Chair, we'll just get a review on what our position was 2 years ago on this.
I think
Yep.
we'll see if we can find that. And because I know we said no, and it was one of the finally negotiated, but I don't remember the fine negotiations that usually happened at 10 o'clock midnight.
It ran afoul, Madam Chair, of what 30 years ago was the ability to for gaming and things like that, where the host would allow someone to come in and run the whole show, and the
Las Vegas night.
owner of the place would get all the money, and the church or the charity would get $50. And there was no, it was a scam. So, yep. But who knows what this one exactly is? Yep. Thank you.
Okay, well, we will get backup testimony on all of this. We have got about 15 minutes before we get back to the insurance market.
Madam Chair,
Yes,
can I just tell you guys what I found about arrearages or didn't
sure.
find, for that matter? We took testimony from a lot of people, gas, water, and electric utilities on February 2nd about arrearages, but I cannot find any language or funding in either S or H315 or the budget adjustment bill. So
Okay.
it seems like we didn't do anything after we got the testimony, but I definitely could be wrong. So it might be, maybe Graham could check in with somebody who knows.
Wait, I have a
AFO.
message. Okay. Here we go. When the joint fiscal committee accepted the 200 million. We allocated 110 million for rental assistance, which included utilities.
That's right.
Says Robert Dostis, who's with GMP, is asking for more help. I was planning to take this up with the committee, to see if these are homeowners or households above 80% of AMI. The fast bill does not cover this. So now we're looking at it over there. But
Okay.
we did put it in, it is part of the renters thing.
God, I didn't look at that bill. Okay. I'm glad to know we put it somewhere because I was sure we put it somewhere. I knew we took a lot of testimony and I could not find it in either of those two bills. So that's good to know. Thanks.
And we extended the no shut off order. And I remember the concern was we put money into arrearages last fall, but we had a no shut off order and the money was sitting there and people did not apply for it. Thus, the utilities weren't getting paid until we shut down the department and the utilities removed the no shut-offs. Everybody got a shut-off order and suddenly all the money went out and the utilities got paid. And I think we were wondering if that would happen again. So it's probably time to take testimony on arrearages
So
and see where that goes.
thank you all for chasing that down. Where is that renters bill now?
That was in the $200 million that came in December. They reserved, the bill reserved, I think, something like 50 million of that.
Yeah,
It's still around the 150. The big issue might be is that even while utilities the arrearages was funded with the remaining 150 million that went to housing as an allowable cost, I think those were means tested, as the chair said. So there may be some people above the 80% that needed the help with the arrearage that are not getting it anymore.
Okay.
So we'll take a look at that. We'll have the utilities in. Okay, committee, you've got about 12 minutes. So you want to take a break and then we'll go as long as it takes us to decide. Graham, you have something?
I was gonna say, there's a fiscal note on 437 or 436, the miscellaneous tax bill, if you wanted to see it. It's very little money, but I don't know if you wanted to see it. The
I
website.
don't know if we need to see it today. We'll get it as we go through each section.
Yeah.
And I think once we do the deeper dive, then it will have more meaning. Okay. Thank you for being here. Okay, committee, we're now down to 11 minutes. But
Shall I take you off live stream?
we can go off live.